Hello traders, this is Rich Derrick from Tradesight. Just wanted to take a few moments here and take a look at the current state of one of the most popular ETFs, the triple Qs. What we want to do is take a look at the triple Qs in the daily time frame and take a look at the current state of the market. We had a really nice short setup in the Qs using our Seeker tool that identified the topping process and almost the exact top in the entire move. You can see we had some fairly disorganized trading here as we're kind of just sliding through the summer. But then we had this pretty decent breakout that led to construction in August. And in fact, in August here, you can see that we did complete a Seeker sell setup, which are the candles here with the green numbers over them, 1 through 9. So we had a well-defined upward impulse in that market, and then we started to go sideways after we recorded that nine bars to the upside, which often happens just to kind of recharge and refresh itself before driving a little bit further, ultimately up here to the top. So as we've talked about before, there's two components to get an exhaustion signal from the Seeker tool here at Tradesight. The first requirement is that we have to complete the 1 through 9 sell setup phase, which is right in here, depicted by these green numbers above the candles. Once that's done, then we can proceed on to the sell countdown, which is we're looking for exhaustion and then ultimately a reversal point. So we did start to count while we were kind of going laterally here. You can see the red numbers above the cursor, and then we started to get a little bit more impulsive here and got a couple more numbers counted all the way up until this point, which is what we're looking for, which is we got to 13 days up using our two-day look-back methodology. Once we got that 13 candle, then that signals that the setup phase is done and the countdown phase for exhaustion is done. And the countdown finishes and terminates after 13 bars up are recorded, which we did right here. So we're looking for an entry to get short and reverse to the proper, what's going to be the proper side of the trade here, which we did get on September 20th. That was this candle down here. We did close below the 10 EMA, which is our entry point after getting the exhaustion warning off of the 13 bars up. You can see they did it even in a gap fashion, which is even better. So the short entry was here at 69.73 on this first close under the 10 EMA, and as is typical, our stop loss was defined here automatically. This is the magenta line here, indicating our risk level and our stop loss level. But the trade worked pretty well. It was never really upside down at all. There was one little retest back here, but almost all good trades have one retest at least. So we weathered that just fine. Turn back to the downside here. You can see the 10 EMA picking up this downward bias. But what I wanted to point your attention to today was that we're coming into this line right here. This is what we call the static trend line. This is not something that I drew on the chart. This is something that the program actually plots on the chart for you. And these are very, very key areas of support and resistance depending on which side you're coming from. Now the static trend lines, which we're examining right now, the red line here, okay, they are derived from the setup phase, which is the green numbers here. What it does is it takes the lowest low of that setup phase after it completes the 1 through 9, and then draws that horizontal line on the chart. And the reason that this is so important is because it represents the exact low of that impulsive move to the upside here. Now there's stringent requirements to get this upside move to go from 1 to 9, and after doing so, when that is locked into the chart, then you have true construction. A lot of the other things in the chart are just white noise. If you look a little further to the left here, there's all these bars here with no numbers on them. That's just because this is just chopped back and forth and there's no construction. But once the program has identified construction and completed that 1 through 9, then we lock in this static trend line. So that static trend line right now sits at $65.19. So 65.19 is going to be a key, very, very key area for the Qs short term. So what does that mean to the trade here? Obviously, we initiated a short on the close under the 10 EMA. Our risk level has been defined on the chart here, with this magenta line being plotted automatically off of the amount of potential overshoot pressure that we would expect. And then our first target has been reached, our first objective, if you will, here at the static trend line. So now the first objective has been reached. Now we have to see if we can produce a full 9-bar run to the downside. That would be the green numbers to the downside here, 1 through 9. You can see that after today, we've got 1 and we've got 2. After today finishes and closes, we're going to have 3 candles down. And then if we get to a full 9 bars down again here, what we're going to do is we're going to take then another piece of this trade-off. So we'll check back in on that, see how that shapes up. But just wanted to bring this to your attention that we're coming into a key area here on the Qs, and we hope to see you soon. If you have any questions, feel free to take a trial and pop into the laboratory where you can ask the traders questions in real time, and we can share charts with you. So feel free to do so. Anyway, this is Rich Derrick from Tradesight.com. Good trading.